Hey everybody, hope everyone's doing well and had a good day. This is the Emini review for Tuesday, July 16th, 2024. For the daily chart coming into the day, I keep mentioning we're in this bold channel, but we have 3 pushes up. 1, 2, 3 legs up, and at this point it's even nested. 1, 2, 3 pushes up. Trading range day yesterday, I thought the odds were we would find sellers above yesterday's high and buyers below the low. It's a tight trading range, limit order market. And the expectation coming into the day was more sideways price action because markets have inertia and we've been going sideways for a lot of bars. We're probably going to keep going sideways. There's a little bit of a bearish bias because of the overall context on the higher time frames. The fact that it's 3 pushes up in a tight trading range far above the average price. At some point, the market is either going to continue sideways or fall to get back to get closer to the moving average. You can see I have yesterday's high drawn. And then one more thing I thought was interesting about the open of the day, which was that today opened around the midpoint of yesterday's range. So we'll go ahead and find the midpoint and go from there. The reason that's interesting or worth noting, so this red line is the midpoint of yesterday's high and low, and you can see we're opening just above it. And so we're not way up in the upper third where traders are more interested in selling. We're not in the bottom third where traders want to buy. We're pretty much in the middle, and that increases the chances that we'll go more sideways, especially on the open. 80% of days have trading range opens. So there's a lot of reasons to expect a lot of sideways price action coming into the day. So we had a gap up, and then bar 1 was a bull trend bar closing on its high. At this point, you could already argue it's 2 legs up. We rallied from the low of bar 77 up to 79, pulled back, and then the gap up in bar 1 is a big second leg. You could also argue this was an expanding triangle from yesterday continuing into today. Getting several legs down, several legs to the upside. So the upside here might be limited. Plus we're expecting sideways on the open. So anything bullish will probably get sold, and anything bearish will probably get bought. Bar 2, we had follow through buying for the bulls, but look at the tail on bar 2. Bar 2 overlaps by bar 1 by about 80%. And that is a lot of overlap. And that's a warning that this is not as strong as it could be for the bulls. The bulls would rather have a bar like bar 2 with no lower tail. Tails on bars just mean that there's a lot of overlap. And that means the market is in a trading range or a channel on a lower time frame. And what that means is that you probably don't have many trapped traders. Even if a bear took a chance on the open and just sold at the very open of the day on bar 1 and got trapped to the close of bar 1, if they scaled in, they would have been able to avoid a loss because of the tail on bar 2. So breakout and follow through, it's good for the bulls, and there's probably buyers below bar 1, but at this point we have 2 big legs up, and even here, leg 1, deep pullback, leg 2, there's probably a limited upside with sellers above bar 2. Bar 3 was an inside bar. It's a bear trend bar with some buying into the close. Because it's an inside bar, it reduces the probability for breakouts. There were probably sellers above bar 3. It's a high 1, but again, inside bar and a bear bar, so it's a bad buy signal bar. And there's probably buyers below 3, but they may not come in until below bar 1. So we might go a little bit lower here. Bar 4, we traded above bar 3, triggering the high 1, and there were in fact sellers above 3. Bears selling above 3 are most likely scalping. So you get triggered above 3 or on a high of bar 3, and then you make about 6 points in a matter of a bar. A lot of traders will take profits and scalp there. But the problem here for the bulls, you have to wonder what the bulls have. There's really nothing to buy, and the bulls would rather buy below bar 1, probably scale in lower, maybe buy at the breakout points over here. We could even come down and test the gap, the close of bar 81, maybe this breakout point. So there's room to the downside. And bar 4 is not a good buy signal bar. It's high in the trading range on the open. Lots of overlap. The downside is probably limited. Like I said, probably buyers below 1. So we may fall a little bit below 4. Inside bar on bar 5. Now we have a more clear second leg up for the bulls. You could argue bar 4 was a second leg. Rallied up on 2, 1 and 2, pulled back, rallied up on 4, and then reversed. And now bar 5 is another rally to resistance. You can call it a truncated wedge. You can call it a double top, but we have 1, 2, or 3 pushes to the upside. And you'll notice the bulls keep failing at this price. And when you look to the left, different ways to look at it, you could say bar 30 was a bad sell signal bar, but the market trapped bulls below it, never looked back, we never tested it. We're testing that breakout point now, and we're finding resistance. Bulls who got trapped, disappointed by the big bear breakout, finally getting a retest. Bulls are taking that opportunity to exit their losing longs, and the bears know that. They know this is an area of interest for bulls to take profits, and so they'll sell to go short. So the market's repeatedly testing this red line, the bar 30 low, and selling off. So as far as bar 5, probably more sellers on the close and sellers above bar 5. Bar 5 is a bad sell signal bar for stop orders, probably buyers below, but again, they may not come in until below bar 1. 6, we tested the bar 30 low once again. The bar rallied and then sold off, and we fell below bar 5, and then there were buyers below the bar. It's a bad stop order sell signal bar. Now we have bar 6, a couple legs down. Look at all the overlap on the open. 6 bars into the day, and we're expecting a trading range on the open, and that's exactly what we've got here. It's a limit order market. Every bar overlaps the prior bar. And if you tried to buy on a stop order at any point today, or sell on a stop order at any point today, you would not be doing well. This is a limit order market. So bar 6, probably more sellers above 6 for the reasons we've already talked about. Resistance to the left, and the market's showing us every time we get around this price, we keep selling off. As far as selling below 6, also not ideal, because now we might be getting low in the opening range. Now the day's range is probably going to expand. It's unlikely we stay in this tight range for the entire day. When we've had 60-point days recently, and the range of this day currently is 9 points. So the opening range will likely double and maybe even triple. But it's not clear for the direction right now. So selling below 6, not very good. Big tail below the bar, probably support below. But still nothing for the bulls to buy. So we may have to go lower to find buyers. 7, a big bear trend bar. But when you see a big trend bar in a trading range like this, you automatically think this is probably a sell vacuum test of support. And where are we testing? We're going close to the moving average. You can see we came really close to it before we stalled. And then the breakout points to the left. On the gap up, traders selling above here would have been trapped in theory. So when we come back and test, there's probably support at these levels. 6 and 7, Looks like a possible second leg trap. Leg 1 on 3, pull back, and then leg 2, 6 and 7. 6 and 7 might be big enough and strong enough for its own second leg, but because it's a tight trading range on the open, that doesn't have to get a second leg, and if it does, it could be really minor. A little bit more down on bar 8, we have a close below the moving average, so bear breakout on 7, follow through on bar 8, but the context is bad. And you look to the left, and you can see the market is in an overall trading range. This is not a bear trend, this is not a bull trend. You see 3 bars down in a trading range, and you can judge the strength of the breakout. We have buyers into the close of 6, small tail on 7, another tail on 8. Now, one thing the bears have going for them, we have a micro gap from the 6 low to the 8 high. That's good for the bears. But we've only got one close below the moving average, and the rest of the bars have been completely above the moving average. So traders will buy the moving average. For that reason, bears will take profits, bulls will buy for scalps. Remember, it's a trading range, so anything bearish will likely get bought, anything bullish will likely get sold. Bar 8's a bad buy signal bar, probably sellers above for a small second leg, but the downside is probably limited. If 7 was such a strong bear breakout, why was 8 such a smaller bar in a trading range bar? Then we got an inside bar on bar 9. Bar 9's a low 1 sell signal bar, but it's an inside bar that reduces the probability. There's probably buyers below 9. You might argue there are sellers above 9, but it's not ideal. It's a bad location to be selling. It might be low in a trading range. The market had 2 or 3 legs down at this point, you could argue. 1, 2, pull back, 3. It's implied. But that's the reason there are buyers below 9. Plus, it's an inside bar. So we know the market's contracting. It's a triangle on a smaller time frame chart. Bar 10, we went outside up. So we triggered the low 1, and there were buyers below. And bar 10 became a decent bull bar. Bar 10 is a bad bar for the bears. If bears see this as a breakout strong enough for a second leg, and then you see bar 10, that's a problem. This could get a deep pullback before there's a second leg down. It could also be low in a trading range. Maybe the high of the trading range is up here, the low is somewhere down here. Now we have a micro double bottom, a failed low 1 short. And then you see bar 10, and I mentioned this micro gap, but the odds are that gap is going to close. In trading ranges, gaps close, and trading ranges are forgiving. So a trader who bought below bar 5 and got trapped will likely be able to scale in and avoid a loss and probably make a profit, get back to their entry price, the low of bar 5. So there might be buyers above 10, but as far as buying above bar 10, stop orders in this trading range, you have to be ready to manage the trade quickly because trading ranges are full of disappointment. Bear breakout bar, disappointing follow through. Bull breakout bar, disappointing follow through. So 11, we went almost outside down. But now bar 11 is a couple problems with 11 for the bears. For one thing, it's probably the second leg down. You can even argue it's 3 legs, but here, this is strong enough for a second leg. We got a pullback, and then 11 could be the second leg. The second leg could be as small as 1 bar. We tested the low close of 9, so the bears have done their minimum. Plus, bar 11 is a low 2 sell signal bar. But low 1s and low 2s at the bottom of trading ranges are buy setups. They're not sell setups. Low 2s in bear trends are sell setups. But this is not a bear trend. This is a trading range. Plus, it's a pretty big bar, so it's a bad stop order sell. There's probably buyers below 11. There might be sellers above 11, but at that point, we might be in the middle of the range, and the sellers may wait to come in a little higher. 12, we did not go below the low 2, but instead, traders bought the close. Then we got a trend bar on 12, which attempted to break out above 11 and then pulled back, could not close above it. tight trading range here, lots of overlapping bars, and limit order market. Now 12 becomes the low 2 signal bar. If we do get below 12, there's probably buyers below 12. As far as selling above 12, it's the same problem. You'd be selling above a bull bar in the middle of a trading range. You can argue strong enough leg 1, 2-legged pullback. We might get a second leg down. But I do think overall this is probably a trading range, and this was not a very strong bear breakout, and it had bad follow through. So we're probably going to test higher before long. 13, we had an overlapping bar, broke out above 12 and then pulled back. You can call it a micro wedge, 3 pushes up, 11, 12, 13. But it's pretty minor. You only have one bear bar in that sequence. On a smaller time frame, there might be a sell setup, but here, not really decent, and probably have to go higher before we find sellers. Now 13 becomes a low 2. If we fall below it, there's probably buyers below that bar. But the overlap continues. There's a lot of overlap, and that's characteristic of trading range behavior. 14, another overlapping bar. It's a big bull bar, probably going at least a little bit higher, closed above all these bars to the left, but it is a bull breakout of a bull channel. So context isn't great. You also look to the left, and I mentioned the bar 5 low. We're testing there. We tested there on 13, pulled back, and now we're testing a little higher on 14, but the upside is probably limited. Tight trading range here. Remember this red line, maybe the bar 30 breakout point. That was resistance. So if we get back there, it's probably a limited upside. Bulls were not interested in buying over here. 15 going a little bit higher. Broke out above bar 14 and maybe a couple bars to the left. Testing these bars, bars 4 and 5 high. And it closed above the prior bar. That's good for the bulls. And we also have a micro channel since bar 10. And so that might increase the probability that there are buyers below 15 for a second leg, but the location is bad and the context is bad. We're now getting high in a trading range, and even though it's a micro channel, it's in a trading range. And so that reduces the probability. You can get reversals of micro channels in trading ranges pretty easily. We had a good example of that yesterday. Climactic micro channel, and then no buyers below the first pullback. Instead, a big climactic reversal. 15 is a bad sell signal bar, so less bears will sell below 15. They'd rather see maybe a second reversal or a bear bar closing on its low. 16, tested the low of bar 15, did not quite get below it. Now we have an inside bar, which is a high 1 at the top of a trading range. So probably sellers above 16, but now we've had 5 consecutive bull bars. You can argue 15 is a bear bar, closed below its midpoint, but it's been at least 5 bars since we've had a bear close. So we might have to go a little bit higher. But again, the upside is probably limited. Probably sellers above bar 2, scaling in higher, betting that the upside's limited. This is not a bull trend. This looks like a leg in a trading range. Look at all the overlap. Breakout on 17, immediately failed, pulled back. So we went to a new high of the day on 17 and then pulled back immediately. There were sellers above bar 2, and the high 1 triggered and failed. It's disappointing. Now we have a low 1 on bar 17, high in the range, so the context is okay. But again, it's still a micro channel. The signal bar is weak. It's a trading range bar on 17. So there might be buyers below, and the bulls might get a second leg up. 18 triggered the low 1, but when you have a weak signal bar, you need a really strong entry bar. And I'm not sure if 18 was convincing enough for the bears to stay short. 18 is a bad buy signal bar. So if we go above 18, there's probably sellers above. 18 becomes a high 1. Or if 16, the inside bar is the high 1, you could say bar 18 is a high 2. Either way, it's a buy setup at the top of a trading range. And bar 18 is a bear bar. So probably sellers above. There might be buyers below, This could all be one leg for the bulls. We pull back and get a second leg. But again, probably sellers above 17. This is probably an overall trading range. Traders are looking to buy low and sell high. 19, we went outside up. Now let's just see. Maybe that was a 50% pullback. It doesn't look like it quite got there. Actually, now that I draw it, it does. So this might be a 50% pullback. The bulls don't want to buy at the top of a trading range. So the bulls aren't buying up here. They're buying a pullback. And you can see where 19 tested just about a 50% pullback if you use the entire range. You can draw it different ways. Maybe if you don't include 17, that's just about a perfect test. But either way, it looks pretty close to a 50% pullback. Now we have an outside bar on 19. We know the problem with outside bars, especially in trading ranges. They are trading range bars, expanding triangles. So as strong as 19 looks, the upside is still probably limited. It's a strong bar. We might go a little higher. And markets like symmetry. So if this is all leg one, we make it a bigger second leg. But because of the characteristic of the day, with all the trading range price action, lots of overlap here, lots of overlap here. This looks like a bull leg in a trading range. Look to the left, it's overlapping. The upside is probably limited. There's probably sellers above. Breakout bar on 20. Good for the bulls, but there's still problems with it at this point. Bar 20 is a breakout bar, so it's closing above all the bars to the left, and that's good. It's closing above a lot of bars. But look to the left, we're still within this range. So we have an overall trading range still, and we're pretty high in the range. Now if you look at bar 20, just from today, it's a possible leg one and then second leg trap. Second leg traps, it's pretty common to see the second leg in second leg traps look pretty strong, just like this. You have these consecutive big bull bars closing on their highs, and they're suddenly a lot stronger than the first leg. Compare the strength of this leg to this leg. And over here, we have some bear bars, lots of overlap, bars with small bodies and big tails, and then suddenly so much strength. What's causing that is you have bears looking to sell higher. They see that this is strong enough for a second leg. 19 was pretty strong, probably go a little higher. So they'd rather sell a little bit higher. But I think it's less due to aggressive bulls buying. And that's because we're probably high in a trading range. So at this point, 20 looks more like a second leg trap, and it might be a bar that bulls take profits on, using it as a gift. We're also testing resistance to the left, the bar 27 high. That was a low one signal bar. And if you think about it over here, the market rallied on 26 and then a little bit on 27. And there was some unfortunate bull who bought the high tick of bar 27. So after that, we have all of this. The odds are when we get back here, those bulls are going to look to get out of their longs. So there's probably sellers in this area. So you combine that with the fact that it might be a second leg trap in an overall trading range. The upside is probably limited. One more price that might get tested. The low of bar 23. There should have been buyers below. Instead, we had that big bear surprise. $21, we rallied a little bit higher. Maybe we tested the bar 22 low. You can see we came really close to it on bar 21. I also mentioned 20 was a breakout bar. We still need follow through. And then, of course, we don't get follow through on 21. So if you're a bull and you bought bar 20 and you get bar 21, that's a problem. If you're front running the breakout, you're not waiting for follow through, you're taking a chance. Then you get bar 21, you probably have to get out below 21. Even if this might get a small second leg, maybe get a rally on another bar, test the bar 20 close, the odds are this was more of a second leg trap. It's also interesting. It looks like a nested second leg trap where the low of bar 77 all the way up to bar 2 was the first leg. Then we had this pullback, and then this entire rally was the second leg, which of course subdivided into two smaller legs. Now we have bar 21, a bear reversal bar closing on its low. With pretty good context, there actually might be more sellers below 21, disappointed bulls getting out of longs, and bears getting short. Might be a little aggressive. Bears might prefer a second reversal, a second entry. But I do think if you're long for any reason, 21 is reasonable to exit below. 22, we have a small pause bar. 22 would be a high 1 signal bar. But we know it's a high 1, high in the trading range, after a possible second leg trap, bull breakout with bad follow through, probably more sellers above 22, and there's probably more room to the downside. 23, that becomes the high 1, sellers above. It's a bad buy signal bar. We have a bear body, even though it's a buy reversal bar. The context is bad. And now we're getting, bulls might look at it as a little bit of an endless pullback. We rallied. They're expecting a pullback in a second leg, but we just keep creeping lower and lower. And then finally, 24 went outside down, and that was probably the give up bar. And by give up bar, what I mean is any bull who was long here, giving it a chance, hoping for a pullback in a second leg, they're using any small pullback they can get to try to reduce the damage and reduce their loss. So we have this high 1, and we trigger the buy, and all the bulls exit their longs above. In bears, they have a 3-bar micro channel after a possible second leg trap and a strong signal bar. They'll also sell above that bar. So 24 is outside down. We do have a pullback, so it might be 2 legs, but is 24 a second leg you really want to buy? I don't know. Not necessarily, because this is a pretty tight channel, and it's a breakout on a higher time frame. Also, you think about the 15-minute chart. If you look at this chart, I have every third bar. I have numbers on every third bar, and that correlates to the close of a 15-minute bar. And so what that means is we had this bar on the 15-minute chart. It's a bull trend bar with a big tail. And then this is another bar, these 3 bars up to 24. So even though we have a pullback on the 5-minute chart, there was not a pullback on the 15-minute chart. So it's a minor pullback. This is pretty tight, and this is all probably just one leg. After 2 big legs up, high in an overall trading range, we're probably going at least a little bit lower. And then 25, it looks like everybody agreed, and traders sold the close of 24, and we got this big bar on 25. Now 25 is a big trend bar, testing support. We're testing the low of bar 19, the outside bar, where earlier bears who sold on the way down got trapped on this rally. So there's support here, buyers below 19. Plus 25 is a big bar, the biggest bar in all of these bear bars. So it's climactic. You have bears who sold up here, maybe below 21, or even if they sold above 23. If you get 25, you might take it as a gift and take profits on that bar. So you have some bears up here taking profits. You have trapped bears down here buying back shorts. So we might bounce here, but the reality is this breakout is strong enough to be a leg 1 breakout, and strong enough that we'll probably go a little bit lower and maybe test the bottom of the range. We've had a couple legs up, and now we might get a couple of legs to the downside. But because it's a trading range, you can expect, or at least not be surprised, if there's a deep pullback before a delayed second leg. 26 inside bull bar. I said even though there's probably support here, the bar 19 low will probably bounce. That doesn't necessarily mean it's a good area to buy. So even though 26 is a good looking bull bar, it's an inside bar after a pretty strong breakout for the bears. So there's probably sellers above 26. Then we got an inside bar on 27, so consecutive inside bars. It's an II pattern, breakout mode. The bears are seeing it as a bear flag. We have a pretty small, but you can call it a bear trend. And then this is a bear flag. We were going sideways, but the odds do favor a second leg to the downside after this breakout. The bulls are hoping it's a trap. They can buy below 27 or 26, get a reversal up. Maybe it's an expanding triangle with here. But again, the reality, this is just kind of too strong. You have disappointed bulls, trapped bulls into bad longs, bears who didn't sell, they're looking to get short. We're still, at this point, this is about the middle of the trading range, but this is still the sell zone, the upper third. 28, we have a bear bar closing on its low, closing below the second inside bar, but not the first. So we're still within this tight trading range, but the bulls still don't really have anything to buy. It would have been better if the stop order triggered above 26, but it did not. So we still have a micro channel since 24 down to 28. The bulls don't really have anything to buy, so if there's nothing to buy, that means it's okay to hold on to your short. And if you're not short, you can get short. 28 is a bad buy signal bar. You can call it a micro double bottom, but obviously it's a bad signal bar. There's probably sellers above. There might be sellers below. Consecutive bear bars closing on their lows after a strong breakout. Look for a second leg down. And then we rallied on 29, and that could be a second leg for the bulls. This is the major leg, leg one. This is a minor leg one, so that might be strong enough for a second leg. It's a decent bull bar. This is a pullback of that bar, and then we get this second leg on 29. It's pretty much a variation of a second leg trap. Well, I say that. It could be a variation of a second leg trap, similar to here, leg one, and then a stronger looking leg two, only to reverse. Well, this second leg for the bulls, leg one, leg two, looks stronger than the first, but the reality is this is still a strong enough breakout. This was not enough of a trendline break and of a reversal. We might just be testing a breakout point like the bar 24 low. 25 was a little bit of a surprise, and now we're testing back to that price where bears may not have shorted, they got trapped out, bulls might have got trapped in, betting on leg one, leg two. So we're testing back to resistance. So 29, as good of a bar as it looks, might be more of a sell to close bar. 30, we have an inside bear bar. And now we have a low two short. 27 is a low one, 30 is a low two. We're still expecting a second leg down and a possible test of the bottom of the range down here. Might as well draw the bottom of the range. We're expecting support around this line. And I'll clean up the chart a little bit. So now we have bear breakout, two-legged pullback, low two sell signal bar on 30 with a pretty good signal bar. Even though it's an inside bar and it's a pretty tight trading range, there's an increased risk buying below it because it might be a low two after a bear breakout that was strong enough for a second leg that has not gotten the second leg yet. And so what we might see, just want to make that was not correct. What we might see is a second leg. Leg one equals leg two. So there's leg one, and we put it here. It's possible we come back down here. No surprise, that takes us very close to the high or the close of bar 81, the close of yesterday. Another inside bar on 31. It's good for the bulls that they did not let the low two trigger below 30. And we have consecutive inside bars once again. But again, strong enough breakout for a second leg, which we have not had yet. And now we're getting higher lows and higher highs. That means we have a bull channel, but bull channel means bear flag, bear breakout, bear flag, probably get the downside breakout. So 31 being an inside bar, there's probably sellers above. And there might be buyers below, but again, the context doesn't really support it. It's a bad sell signal bar, that is true. But bad signal bars in trading ranges work all the time. Whoops. And then outside down 32. So we triggered the buy above and then sold off and closed near the low of the bar, below bar 32 or 31 and 30. Outside down, you can call it a low 3. We rallied, second push, and then a third push. Wedge bear flag, and then a pretty decent bar for continuation. There might be sellers below 32. Bulls might just give up below it, look to buy lower. Bears who missed the first leg looking to get short. This might be the start of the second leg. So this might be where you put the second leg projection. It's also kind of aggressive to use the tails. If you want to be more conservative, you could always use the bodies, like the open of 21 to the close of 25. You can see that's much more conservative, a smaller second leg, and that brings you right to the bottom of the range. Kind of hard to see. And thought I could extend it, but I guess not. Either way, we know there's support for a couple of reasons. A couple of leg 2 mesh moves down here, the bottom of the range, yesterday's close. And once we get down here, this becomes the lower third of the trading range from yesterday. 33, we have a big trading range bar. 33 had a big breakout to the downside. Even though it closed above the prior bar, above the low of the prior bar, this was a pretty significant breakout. If a bull bought below 32, they find themselves long at a loss way down here. When the market rallies, they'll probably use that opportunity to exit their long. And the bears see that breakout and they want to participate in it, so they'll see this as a breakout pullback and then look to get short. 33 is a bad buy signal bar because it's a big bar. It's a trading range bar, so there's probably sellers above inside of a tight trading range. Sellers above for a couple of reasons. And we're going a little lower on 34. Breakout, pullback, second leg. It's a nested second leg, leg 1, leg 2, with a couple pushes. Testing low in the range. The downside is becoming limited. Bears are less willing to sell down here. As you can see, we're getting buying into the close of bars. Once we get into the lower third, we're testing areas over here where bears who were selling were getting trapped. But now 34, similar to 33, is a bad buy signal bar. It's probably sellers above. It's a big bar with a bear body. And it's forcing you, if you do buy above it with a stop order, you're buying in the middle or the high of a tight trading range. Inside bar 35, trading range bar, lots of overlap. Not an ideal stop order market. It's really a limit order market with sellers above and buyers below. 35 is a low 1 sell signal bar, but it's a trading range bar. It's a bad bar to sell below, but instead of buying directly below the bar, traders might buy below 34 or at the low of the day. Inside bar 36, consecutive inside bars, breakout mode. Inside bar, we know the range is contracting. So we had this big range on 34, smaller 35, even smaller 36. At some point, we're going to break out to one side or the other. But 50% chance the first breakout of a triangle is the wrong way. So we could easily get, this could be a final bear flag. We get a bear breakout attempt that fails and ultimately reverses. And I say that because we're low in a trading range. We've had a couple of legs down. If we get another breakout, that might be maybe a wedge bottom, 3 pushes, 1, 2, 3. We're getting the bear breakout on 37. 37 is a bad buy signal bar. We actually have a micro channel all the way back since 32 to 37. 37 is a buy reversal bar, but it's a bear body. Micro double bottom and double bottom with over here, but probably sellers above for a scalp and a second leg. And there's probably buyers below the bar. 38, we had a bull breakout. Any bear who sold above 37 is disappointed with their entry bar. Similar to over here, if you bought below 32, the market sold off a fair distance before coming back. Here, if you sold above, the market went a pretty fair distance before pulling back, and it's disappointing. Even though the bar didn't close up here above the moving average, it did close above the prior two bars. That's enough disappointment that bears will look to get out of their shorts anywhere down here. 38 also becomes, you can call it a low 2, maybe low 1, 36, consecutive inside bars. That triggered, pulled back. Now we have a low 2 on 38. But 38 is a fairly big bar. It's a bull bar, and it's low in a trading range. Bad stop order, which means good limit order trade. Probably buyers below. 39, we have a bear trend bar. It's a good looking bar. In fact, it's the best looking bear bar we've seen all day. And you always have to be suspicious about that, especially when you ask the question, breakout of what? So 39 is a breakout bar, but it's only breaking out below 38. Look to the left, we're not even breaking out below the low of 37 or 34. Now it might be a more clear 3 pushes down. And there's different ways to draw it. Maybe from here, 25, 33, 39. Of course, there's a lot of tests in between. The point is that this is a bear channel with decent buying pressure. 26 is a good bull bar, 29, even 31, even though it's small. And then this bar rallied a good distance, became a bad sell signal bar. So 39, a good looking bear bar, but possible wedge bottom at the bottom of a trading range. The downside's probably limited, and the odds that we break out of this channel line are low. And then that 40 was a big bull trend bar. 39 became a buy the close bar. Big reversal on 40, probably a leg 1. We've had 2, maybe 3 legs down. Now we're getting a reversal at the bottom of a trading range. 40 might be a buy the close bar, probably an always in flip. And we're probably going at least a little bit higher. And then 41, it's a small follow through bar. And that's disappointing, even though it's a bull bar closing above the breakout bar. Look at the size difference. 40 was an 8-point bar. And then we had a bar less than 3 points tall for the follow through. And that's disappointing. It's still a strong enough breakout. We're probably going higher. 39 was a good bear bar, bad buy signal bar. There were probably sellers above 39, and they're getting trapped, and that's good. We have a micro gap here. The high of 39, the low of 41. That is good for the bulls. But the upside might be limited. Again, over here, this tight trading range is also resistance. And then 42, kind of a big, small, big breakout on 42. 42 closed above a lot of bars to the left. That's good. It closed above this tight trading range. But 42 reminds me of bar 20. It's a breakout bar, but it still needs follow through. And now this is a classic problem with breakouts in trading ranges. Let's say you buy the close of 42, stop below the breakout, bar 40, and your 1-to-1 is all the way up here, a new high of the day. Is it a 60% chance the market is going to rally from here to here before we come back down and test here? I don't think so. I think at best it's 50-50. And it may be even worse. And what happens there when there's confusion and it's not clear, bulls start to reduce their positions. This is still a strong enough breakout. It's probably going to get a second leg. But I mentioned earlier, similar to this one, that breakouts in trading ranges often get deep pullbacks and then delayed second legs. And part of the reason for that is what I just showed. The bulls get uncomfortable with the risk. The trader's equation isn't very good, and they'd rather buy a pullback. 43 inside bear bar, closing on its low. And you can call it a high 1, and there's probably sellers above 43. We'll probably test lower. Breakout points often get tested, especially in trading ranges. So we might test the high of 38. We might even test the high of 39 and come all the way back down here. It's also not uncommon to see breakouts have pullbacks. that fall below the breakout. So we'll have bulls also looking to buy below bar 40. So even if this breakout pulls all the way back below, you will have buyers below. We'd still be low in the trading range. But here, 43. What about selling 43? It's not ideal because you just had a pretty strong leg one breakout from the bottom of the trading range, expected to get a second leg. Probably better to look to buy, even though we might go a little bit lower. 43 is an inside bar, so that reduces the probability for breakouts. So selling below is not ideal, but there are sellers above. 44, we have a high one buy signal bar. It's a good looking bull bar, but the context is still bad. Bulls want to buy a deeper pullback. We did test the high of 39, or 38 rather. You can see we tested it on bar 44 and then rallied. Remember that high ones are good. They're good buy setups in strong trends when you get a strong breakout, but this is pretty clearly a trading range. So we have a high one in a trading range, and it's fairly high in the range. We might not be all the way up here, but look where we are. We're testing the same resistance we were testing earlier in the day. And so there's probably sellers above 44, and we'll probably get a deeper pullback. 45, we had a big bear trend bar. We didn't quite get above the bar, but we are getting that deeper pullback. 45 might be strong enough that we'll go at least a little bit lower and get some kind of second leg. And when you think about where the bulls want to buy, probably similar to the first one, maybe a 50% pullback. 45 might be testing that price. So this red line, you can see we're testing very close to it, if not exactly on it. 50% is 56.99, and the low of the bar is 56.99. So 45 tested a 50% pullback to the tick if you use the low of 40 to the high of 42. So we expect a bounce there. We got a bounce, but 45 still a pretty big bear bar. We might have to go a little lower, but we are expecting support in this area. So the downside might be limited, and keep in mind this is still pretty decent leg one breakout. Any pullback should lead to buyers below and a second leg up. 46 going a little lower. We tested the high of 39 now, and now we're getting back to the lower third of this breakout. Between these two lines is the upper third. Here's the middle third. Here's the lower third. We're just dipping down into the lower third, expecting support in this area. We have tails on these bars, and so 46 might be a wedge on a smaller time frame. We sold off on 44, then rallied, sold off on 45 and rallied, sold off on 46 and rallied. We don't have a buy signal bar, but some traders will go down to a smaller time frame and look for that stop order on like a 1 minute chart, something like that. Inside bar 47, low one short after it's a pretty decent bear breakout, but again the tails are concerning. It might already be 2 or 3 legs down. And it's a low one in a trading range after a pretty big bull breakout. We're in a support area. There's probably buyers below 47. 48 outside bar. It's still acting as a low one, but now it's an outside bar, which is a trading range bar. It's an expanding triangle. The expectation is buyers below 48, and in general might be sellers above 48. But now we've already had a pullback, so we've had a bear breakout, a pullback, a second leg, and the context. You're expecting buyers down here for a second leg, so it might not be ideal to sell here. And if you are selling, it's for a scalp. And then we went outside up 49. We didn't maybe technically go outside up, but we broke out below 48, reversed, and the bar tested the high of 48. So it functions as an outside bar. Now it's more clear, 2 or 3 legs down, maybe 1, 2, 3, double bottom with 40, strong enough breakout for a second leg, and 49 might be the start of that second leg. 49 is a second consecutive outside bar, so we went outside on 48, outside on 49, and again, outside bars are trading range bars. They're expanding triangles, so as bullish as 49 looks, there might be sellers above the bar, at least for a scalp. But I do think it's reasonable to buy above 49 for a swing. It's a good signal bar. It's a double bottom after 2 or 3 legs down, after a strong leg 1. Still pretty low in the trading range. Inside bar on 50. Bear bar, so we're pulling back, testing the middle of this tight trading range. For the bears, this might be a low 2, but it's a bad low 2 because we're low in a trading range. There's probably buyers below 50. 50 is a bad buy signal bar, but the context is better to be buying than selling here. So it's a bad signal bar, but context makes sense to be buying. And then 51, we triggered the low 2 and found buyers below. 51 becomes a reversal bar, and it's a trading range bar, so not ideal. It's also completely below the moving average. It's not the best buy signal bar in the world, but the context still is pretty good. And we have a sort of a nested head and shoulders bottom. It's pretty interesting. And obviously there's always different ways to look at the price action. But one way I'm looking at it here, we have a left shoulder, the head, and the right shoulder. And then even in here, left shoulder, head, right shoulder. There might be buyers above 51, and certainly more likely buyers below the bar. 52, we have a bull breakout above the bar, closing above the bar, but only closing above that one bar. But 52 is a low 3, maybe low 1, low 2, low 3, and there's probably buyers below 52. So the downside is limited. This might have been the start of the second leg up. Even though we pulled back, we can still easily rally to higher prices, maybe test higher in the range, either here or here. Inside bar, 53. 3 consecutive bull bars, good for the bulls, probably buyers below, and sellers are stepping aside, and they probably won't come in until at least a little bit higher. But there were sellers into the close of 52, so this might have already been a couple of legs up. So that does increase the risk of sellers above, but if there are sellers above, it's probably only minor. 54, another bull bar breaking out. These are pretty good bull bars, but there's a good amount of overlap, so it could be better. And now we have 2 legs up, 1, pull back, 2. The second leg subdividing into smaller legs on lower time frames with implied pullbacks. But still nothing really for the bears to sell. 54, we have 4 consecutive bull bars, bad sell signal bar, completely above the moving average, probably buyers below. And we triggered the sell, and there were buyers below. 55 becomes a high 1, which obviously in trading ranges, not the best setup, so probably sellers above the bar. You can also argue it's a triangle. We're testing near the trend line, the bear trend line. And the bulls want to get a breakout and go higher. The bear is looking for a reversal and then a test lower. Bull breakout attempt on 56, closed above the high 1. That's bad for the bears. If a bear sold above this bar, they're disappointed with their entry bar. So there's probably buyers below the bar. Sellers above, but they may not come in until this swing point. And then instead, 57, we have an inside bar, and it's reacting to this bear trend line. Now we have a low 2, micro double top with 54, 57. Good sell signal bar. Might go a little lower, but it's still probably minor. This is still expected to get a second leg, and this isn't quite the second leg, or it's not likely. This is the second leg. We didn't get a test of the high close. The market likes symmetry, and what this might be is a bear flag from this bear breakout. This was strong enough for a second leg. Maybe we get a second leg testing somewhere around here before we rally for the second leg up. And then 58, a little bit of a sell vacuum. So it was a pretty decent stop order there, but it is inside of a pretty tight trading range. So bears who are selling are scalping. Now we have 2 legs down, 1, 2, testing support. So the downside here might be limited. You can see we're testing the bull trend line as well. And then we have this big bull bar, 59. Breaking out of the triangle, the bulls still need follow through. But what we could be getting is the second leg up, leg 1, pull back, and then leg 2. Big enough bar, probably going at least a little higher. Not ideal to be selling, although it is a climactic bar, and it's likely to lead to 1 to 3 bars sideways. The reason for that, you have bulls who bought lower, taking profits on a big bar in a trading range. We're also testing resistance to the left. And then 60, small inside bar, but not enough to undo 59. There's probably buyers below for a second leg up. Outside bar 61, high 1. Not ideal because we're high in this range, but we know that this could be the high of this overall trading range. And there's no sell setup for the bears, so we may have to go a little bit higher. 61, another bull breakout, but similar to bar 59, expecting more sideways. After that bar, bulls taking profits. We're getting high in the range. You can see we're testing the close of 20, where bulls who bought the close here got trapped on the way down. So that increases the chances we'll at least bounce here and go a little bit more sideways to down. And then instead we had follow through 63, and that's a little bit surprising. Some traders will see 62 as a second leg trap. You can even see it as a nested 2 legs like this, leg 1, leg 2, and then here, leg 1, leg 2. Some might even see it as 3 legs, 1, 2, 3, parabolic. But if it is a parabolic wedge, the expectation after that is a minor reversal and then continuation in the direction of the parabolic wedge. So a minor pullback and then more to the upside. This is a little too steep for selling the close of this bar. There's also a lot of space in here between the bars, so less overlap. So over here, like I said, this might have been the give up bar for the bulls. It wasn't necessarily that bulls who bought here are still trapped. We can see the reaction here was minor. We did sell off a little on 63, but it ended up closing well above the close of 20. 63 is still within the range of 21, so we're still within the trading range. There hasn't been a major breakout. And it's already a second leg, leg 1, leg 2, or leg 1, leg 2. The upside's probably limited. Outside bar 64, high 1, high in a trading range, 2 legs up, sellers above 64. Inside bar 65, IOI, it's breakout mode, and it's 3 overlapping bars in an overall trading range day. Here's the high of the day, the current high of the day. We're getting close to it. We'll probably test it, but there's probably sellers above. 66, bull breakout of the high of the day. Now this is pretty interesting what we have at this point with 66. Overall, the market is a trading range. It looks like a trading range, and you can call it a trading range. But we also have a low, higher low, higher low, higher lows, and then a high, higher high, and then a higher high. So you can also view this as a broad bull channel. It doesn't look perfect. It never really will. But the point is we have higher lows and higher highs in a broad range. The only point I'm getting at is that it's a bull channel, and you can make money trading a bull channel in either direction. Even with stop orders, you could have sold below 21 and made a swing profit. 66, breaking out but still needs follow through. And then you don't get follow through 67. No surprise, but this is too tight to be selling. It's a tight bull channel, and even though 67 is a strong bar, it'll discourage the bulls hoping for the breakout, but it's more likely we start going sideways here with 64 maybe being the bottom of the range, spike pullback channel, and then the bottom of the channel might become the bottom of the trading range. Testing a little lower, 68. 68 is a high 2, micro double bottom with 65, but high in a trading range. After a failed breakout attempt, probably sellers above. 69, triggered the high 2, and then sold off. Could not close above it. Just a couple more dojis, lots of trading range price action. Probably sellers above, limited upside, but the sellers may not come in until above 67. 60, or bar 70 rather, traded below 69, which you could argue was a low 2. maybe a low one below 67, pull back low two, 69. We triggered it, but this was still too tight to be looking to sell. And we're going more sideways here, probably buyers below. Might be 2 legs down in a tight trading range. Bull bar 71, we have an outside bar testing the low of bar 68 and then reversing up. Now we have a high 2, but it's a high 2 in a tight trading range, high in an overall trading range, or a broad bull channel. Probably sellers above, but again, they may not come in until above here. And then another outside bar, 72, so consecutive outside bars. Might go a little higher, but outside bars are trading range bars. As strong as the bar looks, there might be sellers above because it's an expanding triangle. And again, the context is an expanding triangle as well. Kind of nested too. These 2 or 3 bars themselves are an expanding triangle, but we can also see what I'm drawing is an expanding triangle as well. 73 going a little higher, but the upside's limited. We broke out to a new high and then could not close there. Bulls want to close above the new high, but we're getting these overlapping bars and big tails. So this is already 2 or 3 legs up and a possible double top. So it might be a wedge double top on a smaller time frame. Probably sellers on the close of 73 and above the bar. Bear bar 74, but it's a trading range bar. Got a high 1. Bad context, you can sell above the bar. Disappointing for the bulls. Inside bar and a more bullish doji, so bad sell signal, probably buyers below. 75, we sold off below the bar, and there were buyers, but if you did buy below the bar, and that's your entry bar, that's disappointing. And so there's probably sellers above 75. Disappointed bulls here might just exit, but you can see the market's going more sideways. Maybe we'll test lower below 72. It's acting like an expanding triangle. 76 went a little bit lower, but it might be 3 legs down. We sold off on 74, rallied, sold off on 75, rallied, sold off on 76. 3 legs down and 3 legs down. Expanding triangle. Maybe we test a little bit lower, like the bar 64 low, but the downside's probably limited. And then we had a surprise bar on 77, big bull trend bar. But the context is bad. It's trying to break out of an expanding triangle. It's also testing this blue line, which was yesterday's high, and we're expecting sellers above yesterday's high. It's a bad buy signal bar. And what are the odds we just trigger above yesterday's high and then get this big bull trend by the close into the close, this by the close rally? It's unlikely, especially with the current context. Expanding triangle, bull bar, it's sold. The context is an expanding triangle, bull bar, it's sold. A couple of bull bars up, a couple of bear bars down. And it's just disappointing. Every time it's bullish, it gets sold. It's bearish, it gets bought. So on 77, it's expected to act the same way. So it's more of a sell to close bar. And then 78, disappointing for the bulls. Not a very good sell signal bar. It's a doji, pretty big bar. And 77 might have been strong enough for a second leg up. But the problem is that it is already a third leg up and a climactic third leg. So it doesn't necessarily need to get a second leg. And 78 might be sellers on the close and sellers above the bar. And then 79, they sold the close. We're coming back down into the trading range, the expanding triangle. But testing support, we had bears selling above the micro channel, 76. They got trapped, and now 79 is testing that price. Probably at least bounce there. And then we rallied on 80, and it's just big up, big down, big up, big confusion, trading range into the close. Probably expecting sideways. We only have one more bar left in the day. Because we had a bull bar, probably sellers above, bulls taking profits, disappointed after the rally that had the sell-off. And then we just went sideways into the close. For always in today, I always say on trading range days, it's better not to think in terms of always in, but rather think buy low, sell high, and scalp. But if you are trading always in, we have the gap up, follow through bar 1 and 2, but we knew that we were testing resistance, so not ideal. Probably not always in long, despite the gap in bull bars. And then the breakout to the downside. But it was a weak breakout with bear bars that were not uniform in size, buyers into the close of 6 and 8, and the trading range open. So it looks bearish, but really not. And because of the context, more likely always in long. Then we got this rally, and that's a leg 1, strong enough for a second leg. So we are always in long at this point. Bad to be long here at the top of the range, and the equation got bad for the bulls. The wide stop. Buying here isn't ideal. They ended up buying a pullback. They exit their longs, buy a pullback, 50%. We rally. This looks fairly strong, but second leg trap, high in a trading range. Looks like it's always in long, but always in is backwards on trading range days. Then here we have this sell-off, always in short. And somewhere down here, you get to the bottom of the range, 2 or 3 legs down, probably becomes always in long again. And then this breakout, always in long, but deep pullbacks are common in trading ranges. They buy a deep pullback, but still always in long. And then no real reason to look for a swing short all the way up. For stop order trades today, I thought you could buy above bar 10. I'll back up. And here, the reason I don't like selling any of these bars, bar 5 was a bad stop order signal bar. It's a bull bar in a tight trading range, limit order market. But then down here, it's possibly 2 legs down, trading range open, and then a weak bear leg. Weak bear breakout looks like a leg in a trading range. And then we have a bull bar closing on its high, bar 10, micro double bottom, reasonable to buy above it. And then up here, these aren't great. You have sellers into the close of these bars. Buying up here on stops, top of the range, not ideal. Maybe you take a chance buying above 19, but expecting a trading range and just maybe 2 legs up. I thought 21 was a reasonable stop order trade. Second leg trap, strong reversal bar, bear breakout, bull breakout failed, got no follow through. And then low 2 below 30, you could sell, but it didn't trigger. Low 3 below 32, you could sell. Over here, no buy setup in here for stop orders, but you could buy above 40, 41. And then you could stay long, use a wide stop, or you could exit and look to buy a pullback. Outside up, 49, I thought was reasonable. Didn't trigger until a few bars later. 51, I figured that was not a very good limit order sell. So probably buyers above 51. And then maybe you can buy above 61. Not ideal. It's a high one at the top of the range. And this was a little surprising. And then through here, that's a limit order market. You might argue high 2 above 71. The rally was tight enough for a second leg. 2-legged pullback. You can buy here for a second leg. Limit order trades, there's always tons of limit order trades on trading range days. You could sell above bar 3, it's a bad high 1. You could buy below 5, but not ideal because we're probably going at least below bar 1. And then a bad low 1 below 9, you could buy below it. Tight bull channel, low 1 below 17, not ideal, probably buy below it, scaling lower. And then a bad high 123, you can sell above. Bad stop order trades here, tight trading range after a leg 1 for the bears. You can sell above any of these bars. This was a bad stop order, 37, you could sell above it. And then 38 was a bad low 1, you could buy below it. Bad high 1, 44, you can sell above, didn't trigger. Bad low 1's here after this breakout. And then a couple legs down, you could buy below these bars. Low 1, low 2. 54, bad sell setup, you could buy below for a scalp. I didn't mention 57 for the stop orders. I think I mentioned it in real time though. You could sell below that bar on a stop for a scalp. And then 60, bad sell setup, you could buy below it. Same with 63. Tight bull channel, strong enough for a second leg and not a good sell signal bar, you could buy below. And limit orders all through here. Bad high 1 or high 2 above 68, you can sell above. Bad low 2 below 69, you can buy below. Sellers above this swing point, expanding triangle, they get filled here. Expanding triangle bottom, you could buy down here. Sell to close, sell above 77. Buyers below 79, breakout point. And that's about it. And where do we go tomorrow? We'll look at the daily chart once again. And it's interesting. You see today's bar. It looks like a bull trend bar. But when you crack open the bar, you know what happened today. It was really a trading range day. You can argue it's a bull channel. I mentioned that, and it was a bull channel. But look at the 5-minute chart. Does this look like a strong bull trend day? Of course not. And here's the bar on the daily chart over here. So if we look at the past few bars, I mentioned 3 pushes up. Now we have this bull bar, but it's deceiving. And there's probably sellers above today's high. Bull breakout of a bull channel in this context is low probability. And it's more likely we get a bear breakout. So I think sellers above, and it's a bad buy signal bar on the daily chart. But the context is okay to be short. I think you can be short below today's low, expecting a test lower in this tight trading range like down here. And I keep mentioning the moving average. We will get to it eventually. And as always, please feel free to leave questions in the comments and include timestamps for any question specific to this video. Alright, hope everyone has a good rest of their night. Thanks for watching.